The stock market did not know where to price Affirm stock. AFRM, $168 top down in 2021, sold off to $9, has since rallied to $78. We're going to take a look and tell you why we think $78 is too high a price to pay for Affirm. Affirm does two things. It is a payments company like PayPal or Stripe, and they take a little bit for processing the payment. But what their secret sauce is they will lend to the consumer who is buying. 60% of people who went to Coachella used buy now, pay later because they couldn't afford the ticket. Affirm lent it to the Coachella folks and took a huge interest rate. They charged 0 to 36%. But wait, Rob, where's the price to book up here like all of the other banks? It doesn't exist because they're not a bank and they're really not a lender. They package all these loans and they sell them off. They sell them in private credit. They sold $500 million of them to Prudential, and they just want to take the fee for originating them and the fee for processing. If you've been watching our videos and want to invest alongside us,
click the link in the comments. Select your brokerage.
Search for ticker RVER wherever you buy stocks.
Thank you, and now back to our video.
So Affirm is worth $26 billion. They do about $3 billion in revenue. And you can see down here in the EBITDA and the net income, all very positive. So things are going really well. However, what we are worried about isn't that the company isn't making money. It is a couple of risks that could be upcoming. Risk number one for Affirm, they've never been through a recession. Their current loan book defaults at about 8.5%. Compare that to about 2% of JP Morgan's loan book. In a recession, that number doubles or triples, and that loan book, that loan default rate could get really toxic really quickly. And if the loan buyers dry up, Affirm then has no competitive advantage on the payment processing side. Risk two, stroke of pen risk. This kind of business in other countries gets clamped down on because the poorest of those countries are the ones that are hurt the most, and you could see some regulation be thrown at Affirm for how much it's charging on its burrito lending platform. So what does the market ascribe in this business model? Well, the PayPals and the banks of the world all trade under a 20 PE, but Affirm's growing much faster than them and probably deserves a premium PE. So we're going to give it a 30 PE and take a look at this 2027 number. 30 times about $2 a share is $60 a share. This thing is trading $78 a share. There is very little room for error at this price for the risks that this business model has in a recession. So we think there's more risk than reward in this stock price at $78, sort of a valuation call on Affirm that you're just not getting enough upside compared to your downside. Thanks so much for watching. We really appreciate it. Please hit like, subscribe, all that stuff. And if there's anything you guys want to see, please let us know.